Hello, welcome back. This is my second video, and if you're returning, thank you. Truly appreciate you. It is the 27th of April 2026, 7:25 p.m. We are here to talk about tomorrow's expiry plan. What is it that we're going to do when it is time tomorrow for expiry? Okay, so we know this is our price structure. Let me quickly show you just clean price. Obviously, it's a series of lower highs, lower lows. That's what we decided. This is where price closed at on Friday at 3:15 at close, and then Gift Nifty rallied up higher all through Friday overnight, right? And that's where it closed at 2:15 candle, right? Price has been continuously consolidating at this level. So let me quickly show you India wicks. We can derive that a lot of option selling had happened by looking at the wicks, because wicks was falling. Wicks was falling, that means option selling is at play. Volatility index opened over here, has been steadily in decline ever since, all through the day today. So back to Nifty, right? This was our last prior swing high. This is our last prior swing low. So this is a crucial resistance where I don't believe the price might touch over here, and even if it does, it might be a false breakout and then price goes back in, right? And so a false break, tomorrow's action could be a false break above this and steady decline after, or this could be a false breakdown from this level and then rally back higher, right? So we're gonna wait and watch this. Anything in between is no trade zone. We're gonna wait and watch. Let's see what Gift Nifty closes at tonight and opens tomorrow morning. And subsequently, if Nifty gaps up, we don't know. We'll have to wait and watch. If Nifty gaps down, we'll have to wait and watch. So 24,300 and 23,815. Between this is a no trade zone unless we get a retracement back from here, a false breakdown or a false breakout. These are both extremely crucial levels, and as you know, VIX is falling, so a lot of consolidation is happening because a lot of people missed this move. This is something people could think we are shorting right out. This is a healthy retracement. This will go down. It could break down, create a false break, trap all those these shorts. A lot of people will enter here thinking it's the resuming of the bearish trend, right? This entire move has been bearish, so they think we could expect people to believe this was it, but it could continue higher or continue lower is what we are banking on. So this entirety is a no trade zone. A false breakdown is what I am positioning myself for, because I believe this is a crucial level from this prior swing high. Let's go body to body. Body to body, we are at a crucial 38.2 fib retracement level, right? And that is something that sits. I'm just going to quickly, without getting into the specifics of it, I'm going to show you a fib retracement level. Wave 4 is typically 38.2 or lower, but 38.2 is a crucial level. And if I, without getting too deep into the wave theory, so this wave 4 would ideally not interject wave 1. That's a principle, right? I'm obviously talking in terms of price action only, because not everyone is a Elliott wave nerd. A lot of people swear by it, a lot of people. So this ideally would not be touched. 24,320 is something I believe will not be touched. And if I talk just in terms of pure price action, this has been rejected from and consistently been making lower highs ever since. So we might see a pullback down, a false breakdown, a pull up above this level, failure below this before the bearish trend continues. But I think tomorrow is going to be all about trapping. Either on the long side, might be trapping here, or failing below this, right? But this is what I believe it might do, is give a false break below 23,815, and then pull all through the day before us seeing, a decline further in the days to come. So that is my plan. My If it goes higher, obviously I have a position running, a positional play. I will quietly get out at this level, 24,320. I will get out. I would lose my profits significantly. If you see, I was running. Trading's all about resilience. I was at a good six figure, and now it's come down to five. Right? This is what I am at. It's more than half. I've lost about 60% what I was at. But understand, we gotta understand, we are owed nothing. What you book is what you get. So we are owed nothing, and we will continue to hold this position. In fact, I will be looking to add to it. But I think tomorrow's expiry might be a false break and rally higher, and the failure of which would be where I would add. But if it continues upwards, I would do nothing. If it gets a significant close above 24,320, I'll quickly exit my position, and then we may have to reassess the entire price structure. Because see, a failure below this over here would also mean be significant, but because I don't want a winning trade to turn into a loss is where I would book. Ideally, if it, because of the Elliott wave angle as well, if it fails below 24,320, nothing like it. So our expiry plan is to see if it's doing a false breakout, then we would look to short. A false breakdown, we would look to long. But otherwise, if it stays in this zone with wicks declining, that is clearly a no trade zone. So that is gift Nifty 50 for the expiry. And let us see what it does. There's a lot of news coming in as well. If we look at US oil, I was looking to end the video, but let's cover US oil because it has an inverse relationship with the global markets currently, and we'll take a quick look at S&P 500 as well. Right. Oil is also consolidating, right? This could be making a triangle of sorts. Where is the triangle? Right. Right. This is something that we have. I don't know. We'll see what it does tomorrow. Obviously, it's the weekend. Markets were coiling. Now, Mr. Trump had a assassination attempt at that conference dinner. So we're gonna have to see how the markets react to it. S&P 500 has eaten a lot of liquidity. A lot of liquidity has been eaten. I'm gonna quickly show you. See, this was the price range that it was trading at. Right. This was. Now we're gonna have to wait and watch if oil goes up, oil blasts out based on the Iran tensions. Then we can see S&P has eaten all the liquidity from here, and if we check the volumes, they are not very promising, and the RSI as well is not very promising, right? So if this is a true false break, a breakout, pullback, and it's not rallied per se, so we'll have to wait and see, right? A break from here would be a trend change confirmed, because this is a significant swing low level, and change of which will change Dow theory. So right now we have a higher high here, so there's no immediate bearish swing that we are looking for. So Nifty, the same thing, it might trap people below 23,800, and then let's see. That is our plan for tomorrow. Right. All right. I will see you tomorrow. I'll be looking to trade in the expiry tomorrow, and we will be making a video post market close. We will be recording live market, and we will be posting the trade after the market closes. All right. I will see you tomorrow. Good night.